Okay, so good afternoon, everyone. Welcome to this session, Defense Industry and Banking, Key Challenges and Opportunities. As Europe faces a rapidly evolving security environment, there's a need to strengthen our defense capabilities, and this has become more urgent than ever. And beyond political will and budget commitments, there's also one crucial question, especially for this room, which is how do we finance this effort effectively? So in this session, we're going to explore the intersection between the defense industry and the financial sector. So what structural changes are holding back investment? Where should capital flow? How can policymakers and financial institutions work together to ensure Europe's defense ecosystem is both competitive and resilient? And in general, what makes this difficult is that financing defense is complex. The sector has long been seen as a very high risk, highly political, and for many institutions, financial institutions, outside their comfort zone. So, but recently, of course, we in general have witnessed quite a substantial shift there. And to explore this evolving dynamic, I'm very pleased to be joined by two experts who sit at the heart of this transformation. First online, Diego de Ojeda Garcia Pardo, head of the Unit for Defense and Preparedness at the Secretariat General of the European Commission. Diego coordinates the Commission's role in high-level EU defense meetings and has over 30 years of experience in foreign security and defense policy. He's held senior roles in Brussels and Madrid, including as Commission representative to the Political and Security Committee, advisor to the Spanish Prime Minister, and spokesman for Commissioner Chris Patten. Joining him is Alejandro Raboso Campos, senior officer at the Office for Security and Defense at the European Investment Bank. Alejandro helps shape the bank's evolving role in financing security and defense, and he also works on strategic investments in frontier sectors such as digital infrastructure and quantum technologies, and bridging the gap there between public priorities and private capital. So thanks a lot for both of you for joining the sessions. So I would like to start with Diego. So given that this space is evolving quite quickly and dramatically, Diego, it would be great if you could tell us a little bit about the recent changes in terms of policies and initiatives, or the changes that we're going to see very soon regarding the European Commission's policies and initiatives regarding defense, and also how the Commission envisions the role of financial institutions in achieving these objectives. So first of all, again, thanks a lot for being here, and looking forward to you.
Well, thank you very much for your kind presentation. It's not over 30 years, it's almost 30 years, which is bad enough of experience. And good afternoon, everyone. It's a pity I cannot be there physically, but I'm in another event taking place in the city of Ghent. What we have done in the European Commission, together with the External Action Service and together with the European Defence Agency and other actors lately, is quite significant, I would argue. By mid-March, we published the European Defence Readiness 2030 and the Rearmament Europe Plan, which in turn was formed by two separate or two different papers. One, a communication allowing member states to spend 1.5% of GDP on defense extra without being computed in the calculation of the national deficits. And on the other, the second element of this was the draft SAFE regulation, Security Action for Europe, which is basically 150 billion in loans that the European Commission will raise in capital markets and give to member states for their joint procurement and joint development of defense capability, basically to buy or to develop weapons together with others. Because as the white paper says, and President von der Leyen has been saying for a while, European member states need to spend a lot more on defense because the threat has increased and the guarantees have decreased. So there's a perfect storm, and our security has severely deteriorated, and we could be subject of an attack in the future. And the best way to prevent such an attack is by building deterrence, credible deterrence. In other words, by developing weapons of the next generation and buying enough weapons of those that are already available, you're not preparing yourself for war. That's the most effective way of preventing war, because any one of your neighbors, and we have one which is pretty aggressive, will think it twice, and hopefully more than twice, before attacking. So in that sense, the white paper preaches more investment on defense for deterrence, or for peace through deterrence. But we also need, or our member states need to spend better, because still defense markets are still largely fragmented along national lines, and this diminishes or has a very negative impact on the output. And particularly if everybody spends more and you still have the same industrial base, then there's competitive bidding and inflation. So by doing it together, by going into joint procurement, member states at least will minimize this danger. But thirdly, we need to be, or member states need to buy more European. Right now, the figures are not very precise, and different years have different figures. But basically, everybody knows that around 50, 60, or even 70%, it's more likely closer to 50, but that's quite significant, of what our member states spend on defense is spent outside Europe. And it is simply not true that outside Europe you have better weapons, cheaper weapons, and they're more readily available. That may have been the case, but it's no longer true. So if we want to build a larger production capacity by European defense companies, member states need to spend more in Europe. And by doing it together, they will also allow or increase predictability of demand by companies. Now, this is precisely what companies are telling us, what defense companies, European defense companies are telling us. They tell us that member states are making lots of announcements, but that those announcements take too long before they translate into effective orders. So we're asking them to invest and increase their production capacity, and they're saying, yes, but I need orders. Particularly, and here's where I will try to answer your second part of your question, particularly because in all too many cases, European finance, private finance, is still reluctant to participate or to lend to defense companies, particularly the smallest ones or the small and medium ones. And why is that? Well, in some cases it's purely reputational risks. In some other cases it's fear of losing some of their own investors. And that's why, and I will conclude my answer here, don't worry, in less than 2 weeks, we will come out with a draft regulation, what we call a defense omnibus regulation, where we're going to put out a lot of measures changing legislation and to finish or solve a lot of, or eliminate a lot of regulatory and non-regulatory barriers or hurdles that are preventing European defense industry from being more efficient. Some of which also have a lot to do with private finance. Thank you.
Allow me one follow-up question. So what kind of regulations are specifically holding back the defense industry, or what kind of regulations do you aim at adjusting?
I cannot be very precise because this is work in process. I was in a meeting this morning and I was in another meeting yesterday. There's still some things that are being decided. Once the college adopts it on the 17th of June, we will have the certainty. But for instance, one typical complaint by defense industry is that our environmental legislation has a very heavy bearing and actually prevents them from being truly competitive vis-à-vis non-European defense companies. Now, of course, we have to make a balance, because if you give a blanket exemption to defense industry, then you may be safer vis-à-vis the Russians, but you might die of cancer. So, it's not about exempting defense industry from every horizontal requirement, but at least alleviating or mitigating some of those.
Thanks a lot, Diego. Yeah, Alejandro, talking about financial frictions and financial frictions that the defense industry is also complaining about, like how do you see the European Investment Bank's role in loosening these frictions, and how has the bank's approach changed in recent years when it comes to the defense sector, and what to expect going forward in the bank's approach vis-à-vis that sector?
Thank you. First, thank you for having me here, because I think it's a pleasure always. I've been based in Luxembourg since 8 years ago, so every time I have the chance to come to Madrid, I'm very happy. Also, I'm very happy to come to IESE, who is also my house. I've studied here like a couple of years ago, so when this building was not built. So it's nice to come here again, so thank you very much. Coming back to your question, I think that there has been like a shift in the approach of Europe and also the European Investment Bank towards security and defense. I think we have realized that security and economic prosperity are the two sides of the same coin, so we cannot have one without the other. And from the point of view of the European Investment Bank, we have been investing in security for a long time. And let me maybe give you like a little bit of the history of what the bank has done. We started in 2018 what we call the European Strategic Initiative, European Security Initiative, when we invest in dual-use technologies and also in civil protection infrastructure. So that was the main areas where the bank was investing at that time. A couple of years later, in 2022, just after the invasion of Russia, we launched the Strategic Security European Initiative, and that was an initiative that was targeted also to dual-use technologies, but also to increase the security of critical infrastructure in Europe. And that was an initiative that was targeted with a volume of 6 billion euros at that time. So 1 year later, we increased that volume to 8 billion. And now we increase the technology that we could finance. So we include space, for example. We include other technologies and other infrastructure like mobility projects, because we thought that that's critical for the strategic autonomy of Europe. And then we kind of accelerate. I think then we came to the main point and the turning point for the European Investment Bank. That was in May of 2024, roughly a year ago. At that time, we approved what we call the Security and Defense Action Plan, and that was composed of 4 pillars. So the first one was we created a Security and Defense Office, that's a special unit within the bank that is in charge of coordinating all efforts of security and defense. And that's a very important role because we coordinate what is in the EIF also, the European Investment Fund and the EIB, and we have the purpose to increase the investments in defense. So we coordinate all the activities, and we push and we change all the frameworks that are needed within the bank to support the sector. The second pillar was new partnerships with the institutions. So we already work with the Commission, but we signed an agreement with the European Defence Agency, and we also signed an agreement with the NATO Innovation Fund to focus on the development of startups working for the defense. And then I will say there were 2 game changers on the operational updates. So the first one is that we changed the interpretation of dual use. So we changed how we define dual use, and that increased a lot the number of projects and technologies that we could be able to finance. And the second thing is that working with private banks, with commercial banks like yours, we open the credit lines where we work with private sector for companies that were investing in the security and defense, that were developing products in the defense. Before that, that was closed. After that, it was possible to work with those kind of companies, working with the private sector. And I think that's a very important thing. And then in December of last year, so only 6 months later, we launched a 1 billion lending envelope, which is a framework to work with also private banks toward providing funding for the supply chain of the defense sector. And then we come up to March 2025, which is 3 months ago, where we approach, when we approve what I think it's the most important move until now. That is basically two main components. So the first one is that we convert or we integrate these initiatives into a new public policy goal, which is something that is permanent for the bank. And that means that now it's one of the core priorities for the bank and the mission. That also has another impact, is that there's no limit. Now, the limit that we can invest in security and defense is decided by the group operational plan. This means that we can adapt to the needs of EU every year, and we can scale up. There's no limit anymore to this 8 billion. And the second point is that we increase our eligibilities. And for the first time, we allow for investment in military, things that are exclusive military, both equipment and infrastructure. And now I think that we are going to have a lot of projects coming to the bank. We just recently approved that in March, as I said, so now we are seeing more and more projects coming and improving.
Okay. Both of you mentioned like this little bit hesitancy on the sides of the financial institutions. So the question for both of you, and let's start with Diego. Like, what kind of measures do you see, or what can we do, or what can the European Commission do, or like other institutions to nudge financial institutions more in the direction of financing the defense industry as well, and like how can we like reduce barriers, financial frictions there?
Okay, but let me first just welcome very much what our colleague from the EIB has said, because it is very much something that the Commission has been calling for greater involvement of the EIB in defense, and those steps that he has recalled, including these last ones, are not only very promising, but hopefully very useful in practice in terms of channeling greater funding to defense industry, specifically or primarily small and medium enterprises. Because we do have some big companies, the big defense companies in Europe, also in Spain, but there is a vast number of small and medium companies that are very important in the supply chains, and that some of which dual use, not just defense, which need to have all sort of support from the authorities because they are an essential element of readiness. If you do not have an active and agile defense industry that's able to cater at the scale that you need, and we need a lot, then you're not very credible. And if you need 1,000 tanks, I'm simplifying here, but if you need 1,000 tanks and it's going to take you 10 years to produce them, you're going to be credible in 10 years, not in 1, and that might be too late. So what are we doing to sort of bring about defense private finance to allow them or to facilitate that they become more active? Well, all sorts of things. I was in a meeting that Defense Commissioner Kubilius had with a very serious representation of the largest financial banks and insurance companies in Europe. We are doing this defense omnibus in a couple of weeks. We're trying to communicate as well. There is no obstacle in terms of taxonomy coming from the European Commission saying that defense is bad or is negative, and we're trying to be. We published 2 years ago something called the European defense industrial strategy, where we basically highlighted the positive economic effects of defense industry in terms of, just returns, but also high-skilled jobs, technological development. And now we are also trying to underline that defense is going to be a very good business. There's, 150 billion in loans from the European Commission to member states under better conditions than those member states can procure for themselves. That is a massive flow of money for defense. In 2 weeks from now, I suppose the majority of the audience is Spanish. Spain has managed, together with, I think, 7 other NATO allies, to come to the Hague summit with a plan saying that this year Spain will reach 2% of GDP, and several others as well. But in 2 weeks from now, that target is going to move, and it's going to move from 2% to 3 or even 3.5%. The jury is still out on the final number. So that, and it's going to, right now, the prediction is that it's going to be increased at a rate of an additional 0.2% of GDP per year. So if that is the case, Spain next year will have to spend 0.2% extra, in addition to the 2% that has so hardly reached this year. So more money is coming, and it has to go to defense capabilities, to procure, to restock, but also to develop expensive weaponry that we need to ensure our defense. And all of that is going to be massive profits for defense companies, but also to those financiers that allow them to profit from the game.
Thanks a lot, Diego. Relatedly, Alejandro, can also the IEB, what's the role, or does it have a role in facilitating or allowing private capital from the financial institutions, from the financial sector, to flow in the defense sector? Where do you see, or do you see a tension between ESG considerations in the financial sector and spending in defense? And what is the bank's take on its role there?
Yeah, well, when we launched this lending envelope, which is a technical issue from the EIB, but basically it's a program to give finance to the private banks to facilitate the financing of the companies in the defense sector. What we have done during the last couple of months is talking to the banks, basically. We have been talking to the main prime contractors in the defense sector, but we have been also talking to the bank. And what we also have realized is also what Diego was saying, that SMEs are the weakest link, I will say, in the sector, are the ones who have more need. So the bank has different tools to work with the defense sectors. We can work with corporate loans, so we already work with the biggest companies in the defense sector. We are, of course, in contact with the main companies in Spain, like Navantia, Indra, and so on and so forth. But we think that the main push has to be for the SMEs. And to reach the SMEs, we need the commercial banks. That's something that has to happen. And we have been talking to them to try to design the right products for them to deal with the sector. And that's why we launched this program, and we have been adjusting our product. That's why we changed the eligibilities like 3 months ago. Because what they told us is that it was quite complicated when it was before, and now I think with the new rules, I think it's going to be much easier to deal with that. And on top of that, we are designing 2 products that are targeting what the specific needs that they have. So one product is going to be targeting the long-term needs of these SMEs, because if you have to increase the capacity to produce more equipment. Just to put an example. So if you produce a helicopter, military helicopter, civil use helicopter, whatever, if you go to the assembly line to produce just one helicopter, there's a need for 1,500 suppliers just to build one helicopter, from carbon fiber panels, sensors, software, whatever. So it's a very complex value chain in the defense sector. And if you want to increase the capacity of the larger primes, you have to increase the capacity of the small ones, because they are the ones who are providing the components. And that's why we need the private banks. We need to work with them to facilitate that financing. That's why we have designed this kind of product for the long-term investments, to increase the capacity, but also what they need is a working capital, because sometimes the investments, the payments are not immediately, of course. And with that, we are working with the banks to launch a product that will help to de-risk these kind of facilities. It will be a guarantee, and they will facilitate for this bank to de-risk these components, so they will allow us to work more with the defense sector on this kind of SMEs.
So you mentioned, it's important that especially SMEs don't face any financial frictions. Talking about the defense value chain, do you see particular sector? You mentioned components, like specific components where we need to make sure that financing is not an issue or production is not an issue, or like how does the process work of identifying these important components? Is this also something that the bank is thinking about, or?
Yeah, I mean, indeed, we do have some technologies that are clear. I mean, we have been working a long time, for example, with space, secure communication, quantum computing. We already know those kind of technologies are important for the defense sector. We have seen in the war in Ukraine that there are drones. I mean, there are many components of those technologies where we have already been working in the past, because they have a dual-use component, and we have the right tools and the right products. We have these venture debt products when we have with startups that are innovative, and we help them to scale up. We have the EIF, so we work with venture capital funds. We provide funds to these venture capital funds. The EIF is a fund of funds, and they have some special facilities to deal only with defense, which is something that is new. We launched the Defense Equity Facility with the Commission last year, and we recently signed a deal with Kimberto Partners for 40 million for just investments in defense, which is the first time that we do something like this. On top of that, we are talking to the companies. We are talking to the big companies to understand what are their supply chain needs. And we are working with them to identify those suppliers and to try to help them, putting them in contact with the banks. We cannot go, of course, to the 1,000 SMEs directly, but we are trying to help to build the ecosystem there.
Okay, perfect. We are coming close to the end of the session. So again, thanks a lot, Diego and Alejandro, for joining this session.
I'd like to say one more thing, please.
Yes, of course.
Or are you going to give time for questions?
Currently, we don't have yet questions, so we have still some time.
Okay. No, I think I forgot to mention one typical concern from companies as well as from banks. Yes, fine, okay, so you're unleashing billions for defense, but what if there's a ceasefire in Ukraine tomorrow? How can I be sure that my investment is safe enough, is protected, will be profitable? What if there is well, first of all, unfortunately, we're seeing almost every day, we're confirming that Putin is not interested in a ceasefire. So I'm not very confident that a ceasefire will be reached anytime soon. I hope it would, but I'm not very confident. But secondly, when we talk about a surge in defense for deterrence, when we talk about rebuilding European defense, we're doing so because the threat is not going to disappear. Russia has done this in the past, perhaps not at this magnitude, so the threat is going to be there. And the US is telling us that they're going to disengage partially, hopefully gradually, from security in Europe. So Europe has to take a lot more responsibility for its defense. And that is, it's not going to be a short-term job. It's going to take 10 years or 15. And as I was saying before, that is the best investment in peace, because that is how you guarantee that you will not be attacked. So basically, all of the instruments that we're putting on the table will ensure a massive flow of funding to defense in the years to come, in the foreseeable future, even if there's peace in Ukraine, which I hope will come the sooner the better, of course. Thank you.
Thanks a lot, Diego. Yeah, and I think all of us are eagerly looking forward to the news on the 17th, what's then decided, and how this changes the financial institutions' lending behavior vis-à-vis the defense sector. Again, thanks a lot, Diego, Alejandro, for joining the session, and thanks.
Thank you.